Afternoon all, how are we doing? Sorry, late. Few technical problems. I'm here. How is everybody? All good? What are we doing? Trying to figure out where we are. How are you all doing? Afternoon, Amy. Amy, will Japan pull the trigger? See what happens. We'll have to have a look at what's going on with that in a minute. We'll find out because obviously the news is coming up at 3 o'clock. So the PMI figure could well send it over the edge. We'll see. Afternoon, Fletch, Mark, FTNet, David, Evil, Gina, Eri, how are we doing? Crom, Egosa, Gregors. So it is Wednesday. Today we've got the pen. Where's my pen? Today we've got the refresh that because it's not loaded properly. We've got the PMI figures for services this afternoon. So we had the non-farm employment change figure come out this morning, or rather this afternoon, which was positive, and it was quite substantially positive. So it sent the US dollar on a little bit of a rally. The PMIs, however, obviously are much more important. So we'll see what happens with those. These manufacturing PMIs came out as positive on Monday. So we'll see what the services do. This is linked obviously to banking sector, etc., insurance, all that sort of stuff. So a very important figure. We've got Powell speaking later today as well. So there is potential for Powell to say something based on what we've got today that could well shake the market up as well. But at the moment, excuse that, it's just doing some testing. Just let that play out. I just want to minimize that. Just want to get that plotted. So obviously what's happened off the back of the current US news is obviously it's sent the US dollar into a little bit of a rally, which means we are breaking back above that crucial level on the US dollar yen. So US dollar Swiss, not really gone very far. US dollar CAD coming down. Canadian dollar's rallying. Canadian dollar's rallying. We've obviously had some OPEC news. Or Canadian dollar's doing something. There we go. Being told that oil output cut compliance needs improvement. I haven't been paying much attention to oil. Quite sure why that's happening, but anyway, we'll have a look at that. So obviously the yen, if you look at all the yen pairs, a little bit of weakness coming through on the Japanese yen. Everything is rallying against it at the moment. The US dollar, having that positive news, has had a little bit of a pop against it as well. So looking at where we are with this, this is the high from last month. This is the high, basically all these two lines here are basically the monthly and weekly highs we've got basically. So these are the core levels that we've been looking at. So we hit the level, we got the warning, we hit it again, we got a warning, we hit it again, we got a warning, we're there. So potentially this could be it. So if we rally back above that 152 level, which we are very likely to do off the back of a positive services PMI number, we'll be up at ADR today and we'll be above that 152 level. So this is the previous intervention level that we're at right now. So this will be the key to figuring out whether or not the Japanese are going to pull the trigger. We still don't know whether with their new monetary policy stance means that they will pull the trigger or if it's just a threat. They have said that they are watching FX moves very closely. If anything happens that they don't like, they will intervene. We haven't had any news overnight, but this has only just happened in the last hour or so. So there's a good chance that we might get that news coming through overnight, or they may well just push the button at some point today and this thing will be 800 ADR to the downside. So we'll see what happens. But big moves against that Japanese yen again. So news is coming out in 8 minutes. The other news from yesterday, we had jolts yesterday. after the session. The CPI figure for the Eurozone came out as negative for Germany. We had jolts coming out as expected, so there's no real movement yesterday. Market is basically waiting for the unemployment rates, I think, on Friday, unless we get any big moves out of this PMI this afternoon. So interesting to see what happens with this one. I think we'll watch the Euro US because that will give us a better gauge as to what that US dollar is actually doing when the news comes out. So if we look at ADRs today, we've got one, which is the Euro Yen. Obviously, this Yen weakness, that's pushed up into ADR. So just pulling back at the moment on that drop that we've had. So we've got high, low, lower high, lower low, lower high out of the propulsion gap. So this is a good spot to be selling from if you want to get in short. That's the only ADR we've got so far today. And this week, there's no weekly ranges here as yet. And obviously, it's a bit early in the month. So there's nothing to look at on ADRs at all. For RSIs, we've got Euro Swiss extended on the hourly and the 4 hourly. So that's back up again at that 75 level. And the 4 hour, we're also extended up above the 70 level as well, just touching on that 75. So again, big extension on that Euro Swiss. Swiss franc, again, you can see the CAD Swiss is rallying. US dollar Swiss, I've got positions on that. That's rallying. Well, it's not actually rallying that hard, actually. US dollar Swiss is actually one of the ones that isn't rallying. But the Swiss franc, still continued weakness. Not able to really do much, this Swissy at the moment. So just getting pushed around by the other pairs. US dollar yen also extended on the 4 hour. So big extension there on that Euro yen on the 4 hour. So we'll wait and see what happens with the US. But there's nothing much else to look at there. There's not been an awful lot of movement since yesterday. So obviously live room this morning, yesterday, we pushed up and we've kind of not really gone very far on anything. There was no real big ADR moves yesterday. As you can see, it's all very sideways, very, very sideways. I was just doing a little bit of research. I got stopped out of Aussie New Zealand, by the way. I posted this in Discord today or Telegram, one or the other. But got stopped out there. Obviously, the market didn't get anywhere near it, but they still stopped me out anyway because my brokers like to do that. All brokers like to do that. But we're stuck, totally stuck sideways on this Aussie New Zealand. So I've scaled out of some of it just to reduce the pressure a little bit on it. But not really any movement so far this week, as you can see. Yeah, we're just still stuck sideways on everything. It's incredibly frustrating at the moment, this market. Just so little movement. You just want to take range-bound trades all the time. I got out of EuroCAD yesterday, by the way, as well. That was that one there, which was the H1 RSI extension. But, you know, just you want to take support resistance bounces at the moment. That's it. But there's just so little movement at the minute. I was just doing a little bit of analysis. I've got 5 minutes just before I came on. So I've been doing a load of ADR research. I've gone down a little bit of a rabbit hole with ADR research over the last week. So this is basically a kind of a dot plot, if you like, of ADR, kind of as a Bollinger Bandy type thing, if you like. But basically what this is plotting is the distance as ADR measurement from the daily 72 moving average. So this is the daily 72 moving average plotted here. This is a 4-hour chart, but it's a daily moving average. And it's basically plotting 1 ADR, 2 ADR, 3 ADR, 4 ADR, and 5 ADR away from the daily 72, which we know is the quarterly moving average. And I just wanted to see how often price gets extended away from that that level to see if there's an edge available. And as you can see, there is. So the reason I'm doing this research is over the last 3-6 months, RSI has become a lot less efficient because we've got to a point where we've had this 18-month push in interest rates. Nothing has any relative strength against anything else at the moment. When you're using an indicator that measures relative strength between two currencies, and there is no relative strength in the market, it becomes useless. So this is one of the reasons there's been quite a few squeezes of late. So I was just trying to see if there's a way of plotting, which this is an indicator I'm developing, is plotting movement without an indicator to measure relative strength. So measuring relative strength in terms of ADR movement, basically. We know the market pushes and pulls and pushes and pulls. That still happens, even if we're in a very horrible range-bound market as we are at the moment. However, if you're using a daily moving average to plot what the average of the instrument is doing and measure the deviation away from it based on its average daily range for each individual instrument, gives you this nice little dot plot, which, as you can see, allows you to get into price extensions based on, basically, not the strength of the instrument's movement, but the distance of its movement. Yeah, so it's not measuring strength, it's measuring how far have we gone. So a little bit like a Bollinger Band, yeah, but it doesn't calculate anyway, nothing to do with Bollinger. Bollinger is a totally different calculation. Same as pivot points, moving average, deviation, all that sort of stuff. It all uses historical information to plot. ADR measures what the average range of movement is of an instrument. So it's a little bit more accurate in the fact that we can measure it more dynamically, if you like, which is why we use ADR. And it's obviously relevant to each individual instrument as well. So I was just plotting this basically just to see if there's an edge available. I need to tidy it up, but it's looking good. There has never been an instance ever where it's got beyond 5 ADR away from the daily quarterly moving average. There's an edge there. Yeah, if it ever gets anywhere near 5 ADR away from that, it's a buy. RSI, you'd have got signals all along that way into that. So I'm just trying to look at ways of minimizing drawdown basically at the moment, because relative strength is, there is no relative strength in the market, is there? Right, we're off. Euro, US dollar, one sec. Okay, news is out. That's bearish US. So see how bearish that is. So the number will be negative 51.4 on a 52.8 forecast. So very, very bearish. So that doesn't help us with the Japanese intervention at all. Because obviously price is going to be coming down away from that level. However, it is still good because I'm short. I'm also short on the US dollar Swiss, so that's going to help me there as well. But we'll see what the market makes of this. So as a deviation, that's pretty... that's not as bad as it gets, but it's not good. So we should get a sustained move off of this, I think. So ADRs, you're going to get a load of ADR hits coming up shortly, which are all going to be probably US dollar based. So I would be careful trying to take these, because this is quite a negative reaction we're getting on the US on this. So we are due some bad news on the US. So there's a good chance that this might start a correction today. We'll see what Powell says later on, but negative move. So we'll see how far we go on that. New Zealand dollar yen has just hit ADR as well. ADR hit to the upside. So this looks like it's weakening the yen. Yeah, it is really weakening the yen as well, this move, which is not gonna, they're not gonna be impressed with this at all. See where we go. Afternoon, it's time. Florian, Alex, Steve, Brian, morning. Is it 4 yet? And no. It's a bit of a weird comment, wasn't it, in Telegram? Somebody said in Telegram, I don't know if you're in here, Basu, but if you are, you could always ask me a question in here. You know, this is what this place is for. But somebody said in the Telegram group, hi, I need to talk regarding the position trading EA. Thanks. So I said, fire away. He said, I'll be free around 4. Thanks. Sounds ominous, doesn't it? So I've got an appointment at 4 o'clock to speak to this person in Telegram. So we'll see what they say. I'm worried. Like a much better Bollinger hand. Yes. Banned. This could give you a bit of an idea how far something might push against you as well. Yes. So that's one of the reasons I'm just watching this US dollar move. Just want to see if this continues or not. Usually if a move is going to hold, the first sort of 5 to 15 minutes, you tend to, this is why I'm watching the hourly, the first 5 to 15 minutes, you tend to hold. And then it kind of goes. So I'm just keeping an eye on this to see if it is a sustained move or not, or whether it's just going to be a knee-jerk reaction and a retracement. If it is, and that yen has weakened dramatically, if this US dollar is not going to be strong off the back of this news and that goes like that, this thing could fly today. This could be the day. Let's see. Afternoon, Pot DJ. Yeah, so that so all I'm doing with this experiment is just trying to move completely away from instrumentation to daily range movement. I just want to see if there is an opportunity. So I need to run a comparison with RSI as well. Because in times like this, where you have the type of price action we've had this entire quarter one this year has been the worst quarter for movement I think I've ever seen. It's this anticipation of June interest rate drops is what we're waiting for, and the market is just stuck. You get 1 or 2 negative news events followed by a couple of net positive news events on another pair, and what you get is something like that just doesn't stop, or it just grinds. So you're either doing this, which doesn't give you any signals for entry because there's no relative strength, or you get a quick move on news which gives you a relative strength signal, and then the other pair gets the opposite news and you just grind, which means you can't get out of it. So if you replace a strength-based indicator with a range-based indicator, a daily movement-based indicator, it eliminates that issue of being reliant on strength in the market and weakness in the market. Also, with this type of measurement, news is taken into account as well. So this one is a trend. This one, as you can see, is very range-based here at the moment. So in the range, because the range contracts ADR when you go into a range. So whenever you enter a range, your ADR contracts. What happens is it contracts. When you get a news event and you get a big movement in the market, i.e. this, ADR expands, which moves these further away. So it's kind of a similar principle to Bollinger Bands. But what we're doing is we're using the average daily range of movement of the instrument instead of another technical indicator, because all technical indicators are based on historical data. ADR is measuring what the average of the instrument's movement is. So it's unique to the instrument rather than being something that just measures historical information. It is obviously ADR is the average daily range over a period of time, but it's measuring distance rather than a deviation, if you like. So I've only just started building this morning, so I haven't run too many tests on it. So I'm just interested to see. I need to eyeball a load of tests basically just to see if it's got an edge across all instruments. Because if it doesn't work across everything, it's pointless. Okay, it seems to be holding at the moment, this US weakness. We'll give it another 5 minutes. and see if it holds. I kind of would like to see the US dollar actually just that be a knee-jerk reaction and the US dollar take off in the other direction, because that really will put the pressure on the Japanese. I'd much rather have an intervention mood, because it would clear the decks on everything, which would be lovely, but we'll see. So let me just run this. Yeah. So in a market expansion on a news event, you never move more than 5 ADR. 5 ADR is the very maximum away from that moving average you will ever go. The reason I'm doing this, you've probably heard me say it in here before, about the 24 and the 72 moving average, and the why I use them and how I used them in the past. Yeah. So you've probably heard me saying, when you get this extended away from the 72 and the 24, the 72 specifically, act like a magnet for price, because it's the quarterly moving average. It's that reporting quarter that the market uses. When you've moved so far away from that moving average for 3 months, well, not for 3 months, but you've moved that far away from what it's been doing on average over the last 3 months, you know the market is extended. The banks and institutions are over the limit of what they can possibly do, and they need to take profit on those moves. As you can see, the RSI trigger would have been somewhere around about there, which would have put you underwater for that amount. If you're using ADR extension from this moving average, you can plot how far away, when you get the RSI extension, you should be getting into a trade, and what your expected maximum drawdown would be. So there's 2 ways of using what I'm building. Would be either as an entry criteria, so that would be it would replace the RSI as the condition indicator, or you can carry on using the RSI, which is probably what I would like to do. But you can factor in your risk based on, I know I shouldn't move more than 2 ADR away from where I am now. So you can adjust your risk parameters to make sure that you get a maximum kind of drawdown. So it's kind of would help be a drawdown predictor, if you like. So yeah, I'm working on it at the moment. It's just a brainwave I had the other day after doing some ADR research, and I was using Bollinger Bands to see if they would give you any help on this type of sort of analysis. But the problem with Bollinger Bands is they're far too slow. Like when you get, it's more like a moving average, a Bollinger Band. It's too close. It just doesn't work. But ADR does, because ADR is dynamic and it expands and contracts with price movement. So as you can see here, it would never repaint either, obviously, because it's average daily range. The average daily range here is never ever going to change. So it's completely non-repainting. So you know that everything you see on the chart historically, 100% is exactly what would have happened. So from a backtesting perspective, it gives you a lot of confidence in what you would do with it. But you would have got an entry there and an exit there, but it still could have pushed further against you. But so it's not the be all and end all, but it allows you to know that there's highly unlikely that you're going to get much more than 5 ADR away from where you are when you get in. So if you picked 3 ADR, 4 ADR, or 5 ADR as an entry condition, and then used a signal indicator like the market reverse alerts to get in at those levels, you probably wouldn't be far off. So in that respect, it's virtually the same as the RSI. But the RSI downfall is in contracted markets with no relative strength, it's useless. All indicators are useless in certain conditions, market conditions, aren't they? So it's just I'm just trying to see if there's a way of filtering it out, basically. US dollars pulling back off the back of that news. So we've pulled back 50% of that move already. no more ADR hits. So we didn't get any ADR hits off the back of that. See what US dollar yen's up to. I should imagine that's pushing back up again. Yeah. So there's potential for this to not be a move on behalf of the US. If that is the case, we know we've got weakness in that yen. So there's a good chance that this will push above that 152 level. So we'll see. Could be a big one today. Really cool to forecast how far position could go against you. Yeah. And one of the other things as well is I've been doing some back testing with the position trader EA using hourly time frame entries as well, and daily RSI extensions, and it's pretty bloody good. However, the downside is you're only going to make somewhere in the region of 5 to 10 grand a year. Well, I would, out of my account size, because you're not going to get many entries. But if you look at the daily RSI extensions and you look at the 80-20 daily RSIs, yeah, I mean, they are so good. When you get them, they are, hugely accurate. But you're going to get, a handful of trades a year. I think I might have it set up, actually. That's the wrong one. Wait. Yay. Have I got it set up? No, I changed it. I was messing about. Using drawdown control. One. Sorry, I can't quite remember what it was that I was using. I think it was that. That might have been it. Let me just run it quickly and see what it was. See if this was the test I was doing. But yeah, using hourly entries on a daily RSI extension, but it didn't take many trades. But it never got into more than 4 either. Or was it maybe more? 4, 6 or something like that. Wasn't many anyway. So this is a 50k account. There we go. So 80 grand. So it's returned 80 grand over 4 years. So it's not going to set the world on fire. 60 trades in total. So if you look at it on an annual basis, you'd probably get into somewhere in the region of 5 to 8 trades a year. Obviously, depending on instrument. But yeah, that was pretty good. Which is what kind of slightly led me on to doing the ADR research as well, because this highlighted the fact that it didn't get into many positions. So there's 5 trades there. You see virtually all the trades are 1 or 2 entries only. Yeah, you get one that's 3, 3, 2. Then you get the odd one, which was 6 or 7, which would have been a squeeze. 2, 2, 1, 1, 3, 1. There's 5, 1, 2. Yeah, so they're all, and this is what I was trying to figure out, was if we're getting into positions at a later stage, which is kind of what this, people have said. When Lee's got into 3 positions, take your first one, because my average is about 4. So yeah, I was working off the back of this to do that research, and it's kind of there's a few light bulbs clicking for me. You never stop learning in this industry. And I keep saying hourly timeframes and above is where the money's made, because those are filtering out all the crap, all the chop. So using an hourly entry on a daily RSI extension gives you a very, very stable return on everything. I didn't test anything that got anywhere near to blowing anything at all whatsoever. Yeah. Just using normal 70-30 RSI extensions as well. If you go up to 80-20 RSI extensions, you get less trades, but you're only in 3 at a time, maximum. But obviously, it's not the sort of thing you can run a live room on, because we'd be sitting here every day going, nothing today, nothing today, nothing today, nothing today. 20 days later, I'd be going, we've got an entry. Not very exciting to watch, is it? Then again, do you want exciting or do you want to make money? Let's show what this is up to. So yeah, I'll update you on that when I've got a bit more research done on it. I just wanted to build a visual tool to help me see what's going on, which is first sort of step. Kind of trying to run in tester with 70-30 RSI and 0.9 ADR between trades. Why would you run 0.9 ADR? It seems a bit of a random number. Trying to figure it out if I will enter after third trade taken on demo. No. Can't do that in the EA at all. What you would have to do, if you wanted to do that, you'd have to build an EA basically to say when RSI gets extended, yeah, and you get an entry signal, do not trade, flag 1. Yeah. If price hasn't moved down by half an ADR and it pushes up above that high, if it moves more than X ADR against you and pushes down, do not take a trade, flag 2. If it doesn't push down enough to get you out and make a profit and pushes up further again, flag 3, take a trade. That's what you'd have to do. You have to build a very complex EA, which would say, when RSI gets extended, don't get in. But like I've said to you before, Peter, 70% of my trades, which are only singles or 2 entries, you'd miss all of those. All the profit, you'd miss it all. Because you'd only be waiting for those ones that are third entries or more. You'd miss all the good stuff. Like on this one, this test I've just run here, you wouldn't have got that. You wouldn't have got that. You would have got only 2 trades on that. You'd have got 2 trades on that, or 3 trades on that. You'd have missed 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 that. See what I mean? You'd have missed most of it. Most of the moves, you'd have missed them. But if you want to do that, best thing to do is set your RSI at 85.15, and you'll only get in the big moves. You'll get a lot less trades, but they'll be more reliable. Afternoon, Senji. 80K on 100K turnover in 4 years is 20% a year on one instrument. No, not 80K on 100%. This is a 50K account. It's returned 80K. Yeah, so it's 30K profit. And that was run over 3.5 years. So it's about 10K a year. 29,000 divided by 24, 36, call it 40. About 700 a month per instrument. Yeah, roughly. So, but it will also take heat as well, you know, as they all will. So, yeah, but it's not compared to what I'm normally doing. Obviously, the returns are a lot lower. What's happened this month, obviously, has been an eye-opener with the that's held that move, look, on the US. It's been an eye-opener with the ADR strategy. It's just got hammered. So, but the ADR strategy is high risk, always has been, because you're getting in just because price has moved a bit. Of course, it's moved. News made it move. So it's always more risky than the RSI strategy. The RSI strategy's had no problems. It's ADR that had the problems. So I'm just trying to figure out a way of trying to get the ADR a little bit more stable, but which is why I've never traded it. And it happens to be the 1 year I decide to trade it, it goes wrong. Anyway, 10% per instrument per year is 280%. Yeah. Yeah. But it's, I was watching a video this morning. Somebody posted a video of an interview with David Paul. He's a very well-respected, he's dead now, unfortunately, but he's a very well-respected trader. And I was watching his video, and it's interesting because he talks about using ATR as a measurement. All of his work that he did used ATR for his stop losses because it's dynamic, which is what you should be using, not pips. But it was interesting because it led me onto another video of his where he said money in this game is not made by picking an entry or picking an exit. It's made by doing nothing. It's made by sitting still, waiting. Yeah. So that strategy that I've just shown there, which took 60 trades in 3.5 years, you would be sitting on your hands for weeks, sometimes months at a time, doing nothing. That's the hardest bit of trading, is sitting there waiting for that setup to occur. That's how you make your money, by not trading because you're bored, waiting for that to happen. If you backtest something and it gives you a result like that, your job is to not do anything until those criteria are met. That's the hard part, which is exactly what he said. The money is made by waiting, not by getting in, getting out. The market's going to do what the market's going to do. You've got no control over that. What you have control over is not taking trades which are going to hemorrhage your account while you're waiting for the trades to play out. Very key point. Like I keep saying all the time, it's not about how you get in, it's about what you do after you've got in. That's what makes you the money. Getting in, you flip a coin. And in fact, he did that as well. He did the coin flip. He was doing a seminar in South Africa and he said to everybody, it was just a chart up, he said, it dropped dramatically, a little bit like this. It dropped like this. And he said, right, what's this going to do on Monday? And he asked the audience, basically. And he said, I'll tell you what it's going to do on Monday. He got a coin out of his pocket, flipped it, and went, heads, it's going to go up. Because he knows exactly what I know. No idea where it's going on Monday. It's going where it's going to go. You haven't got control over that. What you've got control over is if your strategy says you get in after a drop like that, you get in. Wait. That's all you can do. Anyway, interesting. Good series of videos to watch that, David Paul. Can you make a video to show how to do the back testing? I could do. To do the back testing of what? Afternoon outro. Gina, yes, I would love that too. Don't know what it was. Anyway, right. So we'll have to wait and see what happens with this news this afternoon. So at the moment, it looks like the US dollar is continuing to weaken. Wanted to give it 10 minutes or so to see what happens, but it does look like the US dollar is having a negative reaction to that news, which means so is the yen. So you can see all the other US pairs are moving. The US dollar yen is not moving because that yen is weakening at the same time as the US dollar. So if this US dollar continues to drop and the US and the yen drops with it, this won't go anywhere. We'll just get movement sideways. And as soon as that US dollar stops dropping and they start to unravel that move, it's going to pop. So there is still an opportunity for this to push today and give us that intervention move. But Aussie dollar yen, yeah, Aussie dollar New Zealand pushing again a little bit. But you know, this is it's not really. This is exactly what I'm saying about relative strength. There is no relative strength here at all. You can see the RSI is not giving any signals at all here on a 15-minute chart. There's nothing in it. It's literally just popping up, popping down, popping up, popping down, popping up, popping down, but it's grinding. Yeah, there's no market structure. It's just there's slight bias more on the buy side than there is on the sell side. That's it. But there's no strength in movement at all. So if you pop out and look at the moving average extension here, we are at the moment sitting, wrong one, 39. We're sitting 162 away from that MA. Oops. Four and a half ADR. Maximum it ever goes is 5 ADR. We know that. So, you know, this should be getting to the point now where it's going to start a pullback. But the other thing that happens is this moving average, what happens is the price doesn't move. Price does this. Moving average will catch up, which means that the extension from ADR. Now, this is the important part about what I'm doing with that research is what would normally happen with a Bollinger Band or a standard deviation indicator is when this moves, that will stay the same distance away. With ADR, using an ADR extension, as this goes like this and moves sideways, the ADR will drop, which means that these lines will come back closer to the moving average, so you get more of a contraction in it. Works a little bit more accurately, I think, than any other sort of band indicator. But anyway, I shall be playing with that anyway. Been working loads lately, just rewatching the streams. Cool. How am I doing? Okay, recovering from the loss from last month. How long do you wait? I got out of the pound Swiss yesterday after being in since early Feb, and then there was a market shift within that time. How long do you wait? Until you're uncomfortable. As you can see, I mean, with this Aussie New Zealand, I'm getting out of some of it now. So got out of a fair bit of this just to keep the average as close as possible to it, basically. But if it continues to rally, I'll just keep hemorrhaging on it, basically. But like I say, it's just not the normal market conditions at the moment. This is just not moving. Can't do anything with it. Market's stuck. Look, but look at the, you know, all we've got to go on is history. What happens after the rally? We're just waiting for them to profit take on this move. But when it's going to come, we don't know. Can we please have thoughts on Aussie New Zealand? Can I have a look at that? Oh, there you go. Kind of just giving you my thoughts on it. It's going up at the moment. It's stuck, but it's massively extended and it should be pulling back soon. New camera? No. It's not a new camera. I thought that the other day when I was looking at it. I thought the quality looks better. I don't know if there's been an update on it, but it's not any better. There's a crazy number of ads on the stream. Is it like every few minutes? I've been doing, mate. I'm not in charge of those. I'm playing to Google. Haven't seen much of the SAH. I haven't been trading SAH at the moment. I'm waiting for the markets to wake up. Basically, there's nothing you can do with this. The market conditions we've got at the moment are hideous. FX is hideous. Stock indexes are hideous. The last 3 months on the indices have been 30 to 50% lower in volume and volatility than ever. There's no volume in the market. You cannot trade an opening range breakout strategy if there is no opening range breakout. So I haven't been trading SIH at all. I have, but on very low risk for the last 2 months, and it's not been performing. So I've stopped it for the minute until we get some volatility back in the indices. I mean, it's just not moving at the moment. Where's that terminal not opening? Oh, there we go. So, I mean, we had one good day yesterday by the looks of things in the DAX, but there's just not the volume. It's getting better. It's getting a little better, but the volume's just not there at the moment. There's the open today. That's not the open. Is it 9 o'clock? Maybe it is. See, this is what we're getting at the minute. You get 15 minutes of movement and nothing. It's just not. It's not. It's just not working at the moment because there's no volume in the market. Yeah, the FTSE. Look at it. It's just not going anywhere. Nothing is going anywhere. We're stuck. Everything is stuck. You want to be playing the ranges, but as soon as you start playing the ranges, it will fly and you'll be in trouble. Yeah, not been doing much with it at all at the moment. CAD yen ADR. So yen is getting hammered again. So CAD yen's coming up to the all-time high. We're up at ADR there. Aussie dollar yen pushing back up again. Swiss yen rallying. Euro yen up again. I've got Euro yen shorts. I've got New Zealand dollar yen shorts. Those are both in profit at the moment. And the US dollar yen, which is obviously stuck. That daily RSI extension with hourly entries has got the juices flowing. Yeah, it's good. This is only testing post-COVID. So obviously I'm not testing over COVID because COVID was crazy. So it's just what would have happened after COVID, basically. But yeah, it's I've been testing this for the last couple of days. Basically, I ran a system parameter permutation test using daily and hourly timeframes to see what really works and what really doesn't. So basically, the outcome was 60-40 works. To a certain extent, but there were some pairs which got hammered, basically. So if you turn on drawdown control on those, they actually made a loss, but they would have made a loss, whereas the others would have made a profit. The vast majority of the other pairs that I've tested, everything above 70-30 worked beautifully on the daily. So those are the equity curves you get. There's 93 grand there off the pound US dollar. So those equity curves all work really well. They will take up to somewhere around about 10 to 15% of drawdown per instrument. Yeah, so you'd still have to manage exposure, because if you got into the pound US dollar there and that made 93k, it would have made around about 15% drawdown. If you then get into the euro US dollar and run the same test, because obviously you're trading the US dollar on the pound US dollar and the euro US dollar, if that move was caused by the US dollar, you would be double exposed on the US dollar with the euro US dollar and the pound US dollar. So you would need to run a proper system parameter permutation test, or rather run a portfolio test, and stick all the results into Quant Analyzer to see what the equity curve is like. But this is using as well 1% risk over ADR. Yeah, so this is high risk, but it's high risk because it's high probability and there's less trades. So we're getting in with large volume. If you're getting with small volume, obviously your drawdown will be way, way, way less. You'd still make money, but your drawdown would be less. So I'm trying to find a good set to do position trading with that will return a decent amount of money over a short number of trades, basically. So high risk, high reward style strategy. I haven't done a test on Euro US dollar on this terminal, so it's just had to regenerate all the data. But yeah, as you can see, there are periods where you will get squeezed on it as well. There you go. So that was a five trader. There's three. There's three. There's two. There was a one there, two there, one there. It's moving so fast. But so good. Speed. I'm not used to speed in the backtester. That was 5. 2, 4, 1, 2, 3, 3. Yeah, so it doesn't take many positions. The vast majority are 1s and 2s. You get the odd 3 in there, but then you get the odd squeeze where you're going to take 4 or 5, like that one, which is, you know, normal. But these are playing out, don't forget, because we are trading the daily time frame for the RSI extension. Some of these are playing out over a period of like 3 weeks or so, but there is no big squeeze in here at all. Yeah, there is no squeezes. Because you're waiting for the daily RSI extension, it's moved a hell of a long way before you even get into your first trade on it. So there we go. That's a 94k return. Well, 44k profit, 90k. I don't know what the drawdown would have been on it. It would have been whatever it is. But so that's the pound US dollar and the euro US dollar. You're going to get roughly similar drawdown on it, but that's using 1% risk. So if you drop the risk, and obviously you'd need to drop the reward, the exit targets as well. And that's also using high lot multiplication. If you drop the lot multiplication down, and this is the system parameter permutation test, by the way, I ran on this, where I ran multiple lot multipliers from 1.1 to 1.5. I ran ADR distances from 0.5 to 1. And I ran... Did I bother doing the targeting? I don't think I did, actually. No. I did. I started using different targeting parameters instead of 1% and 2%. But what I actually found was when it hit the 0.5% and the 0.75%, it always hit the 1%. So you're better off waiting to get the payout because it always does it. I didn't bother. I did a system parameter permutation test on some pairs with that, but I stopped doing it after a while because it's faster to run it without those 2 extra inputs. But that's what I tested, the lot multiplication, to make sure that different lot multipliers, how they would affect it. They all still worked. And distance between trades between half an ADR and 1 ADR, bearing in mind we're using the 1-day time frame for RSI extensions, and hourly entries, yeah, on the moving average. But using 1% and then keeping those at the same to keep the tests consistent, it worked on every single instrument over that 3.5 year roughly period. Every single one of them generated return. So really good. But 85 trades. You're not going to get many. So if you scroll out and look at it, if we look at a year, where are we ending? February. So if we go back and look at previous Feb there. So from February to February, you got 1 trade. So there was 2 positions in 1 trade. So that's 1, 2, 3, 4, 5, 6. So 6 trades a year, 1 every couple of months. But massive high strike rate. Well, obviously it's 100% strike rate, but it's, you know, nice strike rate. So, but go and play with it. If you've got the Position Trader EA, or if you want to just download the demo and do the back tests, yeah. So running it on the hourly time frame, using the daily 14 RSI on 70/30, knock that up to 80/20, you get even better results with lower drawdown. But you get a lot less trades. Again, we're only taking a couple, you know, 6, 7, 8 a year. So, you know, how aggressive do you want to be? But yeah, that's not with drawdown control either. If you do drawdown control in there, you're going to take less drawdown as well. But I'm just kind of playing with ideas at the moment. So it's part of the problem with this. So many system parameter permutations at work. It's virtually impossible to pick one. Anyway, good. If you get the graph up from the back test, there's a stagnant few months every year. crazy considering how much the indices have rallied. Yeah, there is always a stagnation period in the SIH and the ORB strategy. However, the stagnation at the moment is due to reduced volatility, like massively reduced. Over 30% less volume than this time last year. It's not an annual thing. This is the markets are waiting for interest rates to change, and we're stuck, contracted in everything at the moment. US dollars dropping again. Can't make its mind up, can it? This US. So it does look like the market is having a negative reaction again. There we go. US dollar CAD ADR. ADR distance from longer term MA sounds interesting. Slower, but maybe less squeezy. Yeah. Yeah, it's a very good. It's a little bit. The reason I started it was because I'm trying to find the problem with automation. That one. The problem with automation is to properly automate stuff is very difficult to do without indicators. So trying to move away from indicators means the only thing you've got left is obviously price action. And price action doesn't work. You know, if you go and look at Elliott Wave, you go and look at Gartley's and Gann and Fibonacci, there's a massive failure rate in all of it. Because when the market goes into a range, none of it works. None of it works. And the market spends 80% of its time range bound. If you start using moving averages, the market only spends 20% of its time trending. Moving averages don't work 80% of the time. Yeah. So there's no indicators out there that actually work consistently, which is why I developed the market reversal alerts indicator, because that uses market structure and price action, which is what's going on right now in the market rather than historical information. Bollinger Bands, RSI, MACD all work historically. Plots of pivot points are just extensions from price. But ADR extensions, as far as I know, there isn't an indicator out there that uses ADR extensions from a moving average. So it's a little bit of a unique concept, which is why I kind of wanted to test it. So, but it has got, it is similar to a couple of other indicators out there that use extensions beyond, like a Bollinger Band. I mean, a Bollinger Band is just a moving average, but it's a standard deviation from the moving average. So it's a very similar concept. But the reason I like it, Euro US dollars just hit ADR, is because it uses average daily range. So it's something that will change dynamically with every instrument. Therefore, it's an indicator that is going to work on every instrument with the same level of accuracy, because it is using the movement of the instrument that you've got it on, which you would say most indicators would tend to do. But the way they plot is always based on historical movement rather than what we are doing on a daily basis, which is what you should be using. So, and that moving average, I think that 72 moving average is what I've always used to plot quarterly trends. So what we're doing is developing mean reversion around a trend. So rather than trying to catch the top and the bottom, which is what everybody does, or try to catch the pullback in the trend just as the trend ends and turns into a range, this gives you the mean reversion on the extremes, whether you're in a range or not. If you're trending, if you're in a trend or not, if you're trending, we can take those. If we're range bound, we can still take those. Yeah. And there will be a measurement we can use to say it doesn't go beyond that. A little bit like ADR. This is ADR, but like ADR, all the ADR research I did. Yeah, we go beyond 225% of ADR only 2% of the year. Yeah, 2%. So there's roughly 6 to 8 days a year where you will go beyond that level. It doesn't do it. So if it does that and you short it, the probabilities are astronomical that it's going to pull back. However, you can't be asked to sit there and wait for one of those to happen because they only happen 8 times a year. So, it's one of those things where all of these mean reversion extreme strategies are going to require a hell of a lot of patience. But there is also the opportunity to maybe pull this down onto lower time frames to try and get more entries. So again, it's something else I'm going to play around with, but quite exciting. I like it when I discover new things. But anything I can do to get out of squeezes, thumbs up. Afternoon day trader, Evans, ADR distance from a longer moving average sounds interesting. That's what I've just read out. Probably want larger PTs. Don't know what that means. I was obviously saying something about something there, which I can't remember what it was. Pound yen, ADR. So this yen's really getting hammered. So this US dollar weakness has really weakened the yen at the same time, look. This is a tricky situation because obviously with the yen being weak and the US dollar being weak, we're not getting the push on the one instrument that we need for the Japanese to do that intervention move. So this isn't really helping us in any way, shape or form today, is it? What's your thoughts on a strategy to enter a trade based on the H4 or daily propulsion gap? I have seen a trend in a chart. Majority of the time, market retraces to the 4-hour. So I built a propulsion gap EA. So many EAs. I built propulsion. Oh, that's a propulsion breakout EA I tested. There's no edge. Blimey, what's that doing? There's no real edge. Yeah, that's not good. I have no idea what that's set up to do. I don't know. But anyway, there's no real edge in that I could find in propulsion gaps in the 4 entries. So if you look at a propulsion gap on any instrument, not a yen. Let's look at euro pound. So when you get into a trend, there will always be propulsion gaps that it will return to and trade out of. Yeah. So there's one there. Yeah. We've only just hit that, and obviously it's traded back out of it. We know that. We know that price is attracted to propulsion gaps like that one there, and then it trades back out of them sometimes. So I built an EA basically to get in when we get back to a propulsion gap using an ADR based stop and take profit. Couldn't find an edge in it. I did lots of testing on it, measuring the different sizes of gaps, whether it was the first hit to the gap, whether it was the second hit to the gap, whether we had to be in the gap and we take a breakout so basically we enter the gap and then we put a pending order and we break out with it. It has to have completed the gap. Then we go long using an ADR stop. I tested all different connotations of using this as an entry indicator that I could find, and I couldn't find an edge. There is an edge in that we know that the market is attracted to them, so they are fantastic for take profits, which is what I use them for, obviously. So when I'm in a trade, this is why I got out of that trade. Exactly where I got out of it was because of that. Yeah. Market's attracted to propulsion gaps, but it quite often runs through them. Sometimes it hits them and bounces. Sometimes it screams straight through them. But what it does is it heads towards them. So for a targeting perspective, they're fantastic. For an entry perspective, they've got the same strike rate as everything else. Flip a coin. Sometimes they work, sometimes they don't. You could use a moving average. You could use a Bollinger Band. You could use an RSI. They've just got the same amount of sometimes they work, sometimes they won't. But for figuring out where price is likely to head, fantastic. But I couldn't find an entry strategy that worked with them. Yeah. I shorted there. I got out there. Why? Because it's the propulsion gap. propulsion gap formed, retested it, came back down, came up, flew straight through it. So if you got in short there, you stopped out. Just couldn't find an edge. Not saying there isn't one, but I couldn't find one. Yeah, so here, the problem I found with this trying to develop a strategy based on propulsion was this one here, for example. So when this propulsion gap was formed, price often pulls back into it straight away and then flies away. So you can use it. I tried a retest, like finding a W pattern out of a propulsion gap. Couldn't get it to work. Then it was a retest. So do you take it when, as soon as it hits that, do you go long and put the stop underneath it? That didn't work. Do you wait for it to close, having tested it and then closed above it? Do you wait for it to have closed inside it and then moved back above it? I tested all of these with varying different stops based on distance underneath the propulsion gap, based on ADR from entry, based on everything. Couldn't find an edge. I was surprised because I use these all day long, but I don't use them for entries. And I thought, you know, seeing this happen so many times, you think, well, it's obvious. But then look at how many times it flies straight through them. You don't pay attention to the ones where it flies straight through them because that's where you're getting out of your trades. You only pay attention to the ones where it goes like that. You go, oh, look at that. I was right. It retested and it went away from it. But you don't look at all the times. It's like the head and shoulders pattern. Everyone goes, oh, wow, look at that amazing head and shoulders pattern. You got in short there. You got out there. Your stop was there. It's a fantastic trade. Go back and find failed head and shoulders patterns that look like this, where it didn't do that and it did that. There are way more of those than there are those. 100 times more. You just don't know they're there because they're not a head and shoulders pattern. In the same way as when price comes back and does not respect a propulsion gap and screams straight through it, you don't spot it. You just know that it comes back and it fills the propulsion gap. That one there, look at that. Textbook. Completely filled it, flew away from it. Look at this one here. Oh my God, it screamed, didn't just scream through that propulsion gap, look, it screamed through 3 of them. Yeah, look at this. Propulsion. Right, it hit it, bounced out, completed it, bounced out. Look at this one here. Hit it, bounced out. Screamed not only through that propulsion gap, it screamed through that propulsion gap, and it screamed through that propulsion gap. All 3 of them failed. So we've got 1 that worked and 3 that failed just on that one chart, in that one little bit of price action there. No edge. But what did it do? Headed for the propulsion gap, which is why we use them for targeting. So if it's going to go short, if you want to hit a short button now, where are you going to get out? If you've got in here and got in here and this and your average is there, where are you going to get out? Because we know price loves these things. Anyway, afternoon, Kennelly. Does it take into account swaps over that period if you hold your positions for weeks? Nope. It's unfortunate that CVD doesn't work well on FX. If it did, that would possibly help with entries. I don't even know what that is, Brian. Never heard of CVD. Is it like a DVD? Is it a cross between a CD and a DVD? Anybody under the age of 30 in here is going, a what? A C what? Right, I haven't really got anything else to discuss today because we are still, as you can see by the Euro New Zealand, still doing the same old thing as we've been doing for the last week. Since the bank holiday, we haven't gone anywhere. So there's nothing much else to look at. We know that now the yen is weakening into the propulsion gap. So again, if you like the idea of it short there, that's where there's a good chance that the sellers are going to go in because that's where the sellers went in last time. But if they don't, it's going to scream up into that bit. So yeah, the yen is moving today. The US dollars had some negative news, which is fantastic. So if you're short like I am on things like US dollar Swiss, all starting to go in the right direction. However, the yen pairs are getting a little bit more squeezed. US dollar CAD ADR. Sure, we've just had a signal on that. I don't know why it's signaling again. So yeah, we haven't really gone anywhere. We've got a move down started, which we've had before, and then we just sit around for 4 days waiting. So this week, because it's non-farm payroll week and we're on Wednesday, there's a good chance that we are just going to sit and do this until Friday when non-farm payroll comes out. So non-farm is on Friday, obviously at 1:30, which is the unemployment rate for the Canadian and the US. So this is where we're potentially going to get a big move starting to form. Tomorrow morning, we've got the Swiss CPI as well before the unemployment claims tomorrow afternoon. So there's a potential mover on the Swiss franc there. If we get a negative number, i.e. this isn't a 0.3, it's a 0.1 or something, that Swiss franc's going to collapse again. But we will see what happens. So it's not really a lot else to look at today because nothing much, as you can see, is moving. It's just what we're doing. Cumulative volume delta. Yeah. Cumulative delta. If you'd have said CD, I'd have known what you meant. Yeah. We don't have it in the Forex market, though. Well, we don't have it in... Actually, that's not strictly true. We don't have it in CFDs. Which is what Forex is, really. But yeah. But, you know, we say that cumulative delta is very useful when you have volume to work with. So but if you had a way of holding futures contracts overnight, which was not as expensive as it is, we would all be trading futures, because if I had access to volume data that I could use for swing trading, it would be amazing. Imagine what you could do with divergence on an hourly or a daily time frame if you could have it. You can't, because you can't hold overnight, unfortunately, in futures because it's too expensive. You can, obviously, but you need a massive bank account. And it's dangerous. We could really do some New Zealand strength. Yeah. Again, New Zealand CAD, you know, this is why I've not really got anything to talk about. We haven't gone anywhere, have we? We're in the same place as we were last Thursday. Totally sideways. It's stopped weakening, which is good. So we haven't gone anywhere. There you go. There's some great examples of propulsion gaps failing. Slam straight through. Slam straight through. Slam straight through. Worked beautifully, but then slammed straight through. Yeah, it just doesn't work as an entry criteria. It works as a magnet for price. But I've done loads of analysis on propulsion gaps over time, because when I learned about them from M.A. Perry, the wide range bar theory. I did a load of analysis on it, trying to find an edge to use them for entries. I couldn't find one, so I dumped them. And it wasn't until I started looking into propulsion theory and all sorts of other stuff that I fell back into them. But they're great for targeting, but not for entries. I mean, you can use them for entries, obviously. They will work sometimes. They will a coin flip. Do you have an update on your figures for last month? No. Basic negative 25k, something like that. 28, I think it was. Wiped out the whole quarter, basically, because I split my balance down into 3 accounts and didn't trade them properly. So the hedging account blew 13k, and ADR was 13 and a bit down. So not good. RSI, fantastic. RSI did very, very well. 7k last month, which is why I'm now sticking with RSI only. Going back to what I've done for the last 4 years, rather than trying to get cocky and trade 3 strategies live. Can't do it. Too much work. Too much to watch. Yeah. Not good. ADR was the one that really hurt last month, because I had a decent amount of money in that one. The hedging strategy was only a little 15k account to test the hedging strategy, but I stupidly didn't do drawdown control on it, which was my fault. Because the EA was running it with drawdown control and it absolutely creamed it last year. But in hindsight now, looking at the last 3 months, the reason it creamed it was because it was doing drawdown control. And that isn't what I was doing. So hence using automated drawdown control, which is what the set file does. Lesson learned. Right, that's all I've got for you today. So these yen moves are good entries for shorts. So obviously we know the Japanese yen is on the cusp of an intervention move if the US yen pushes against it. However, at the moment, it's not looking like that's. Oh, maybe it is. Look, propulsion gap. Look. Worked. Oh, worked. So yeah, these are entry. I'm still holding short on this US dollar yen. I've got US dollar yen and euro yen and New Zealand yen short. Break even on these two basically. So all these ADR hits to the upside that we've got on the yen pairs today are obviously because the yen is weakening off the back of the US drop. So the question will be, if that US suddenly turns tail and runs north, US dollar yen is going to rally. If US dollar yen rallies and it gets above 152, we are going to have the Japanese screaming blue murder at us. So we will see what happens. Again, critical point. How many times have I said this is a critical point in the last 2 weeks? What have we done for the last 2 weeks? So yeah, if we do break above that, I think that's when we're going to get the moves. So keep your eyes peeled on financial juice overnight for any yen noise. But you'll probably find they won't give much more warnings. They'll just press the button and do it. So all about that today. We'll see what happens. But at the moment, nothing much else moving. We are just undoing basically moves at the minute that we've been sitting in for 2 weeks. So we'll see where we go. So news this week. I will be back on tomorrow. 12:15, I think. When the website loads. Okay. Yeah, so 1:15 tomorrow. We're going to do the unemployment claims and see what happens with those. But as I say, it's all about Friday this week. It's about the unemployment rate. So I suspect that's probably what we will see for today and tomorrow. But we'll see if we get any movement. But yeah, just holding stuff at the minute. So going into drawdown on EJ. I'm just a break even on that. But, I've been holding this, waiting for the US dollar yen. And, this is the trouble at the minute. This is what's causing the problems at the moment for me specifically. Position trading relies on momentum, strength. The market is just unbelievably dead at the moment. It's push, stop. That's it. That's all we're getting. It's just not conducive for any style of trading that relies on any kind of technical analysis or indicator. It's just not working. There is no structure to this thing at the minute. So, yeah, holding, costing money in spreads, pretty much our life at the minute now. UJ short may get triggered at 152. Yep. Yeah, and that's what we're waiting for. So we're looking at 800% of ADR. So at the moment we're looking at 69. So you'd be looking somewhere in the region of, I'm gonna have to scroll out. That's 10 ADR. So call it 8. That's where we'll be in 1 4-hour candle if they call that intervention. So, this is why I've got no TPs on any yen trades at the moment. because I want to get paid on them. I need to get some profit back, basically. So I'm holding out on this yen intervention move, which is why I would love to have seen that as a positive news event today for the US, because that would have triggered the intervention, which would have paid me nicely, but not yet. However, the fat lady, as they say, has not sung. So we could still get that move positive. We've got 2 more news events this week for the US. 2 of those news events could come out as positive. Yeah, if they both come out as negative, I win anyway. If they come out as positive, the Japanese are going to do something about it. So we will wait and see. But yeah, we're just sitting here monitoring at the minute, aren't we? Nothing you can do about it. The most hideous reversal alert in the world has triggered. 6 days it's taken for that to shift. What can you do? It's just... She's on a diet. Yeah. The fat lady is on a diet. Hopefully, she'll go and scoff a load of McDonald's. That'll fly up. And we'll all be sitting here. One day, I can guarantee you, within the next couple of weeks, one day we'll be in here and I'll be going, there it is. And we'll all be going, but just a case of waiting, isn't it? And this is the most difficult part of trading. Sitting here, waiting. Sitting through this. Get that. But anyway. Right, so we're back tomorrow afternoon and we will see how we get on with the unemployment claims at 1:30. Don't forget CPI tomorrow on the Swiss. If you've got any Swiss trades on, tomorrow morning we've got high volatility coming on that. And we've got Powell speaking this afternoon. Not sure anything's going to be said on that. We're waiting for Friday. So we'll see what happens, but we might get some volatility off of that this afternoon as well. So just be aware that he is also talking. All right, so have a good rest of the afternoon. I'll be back tomorrow at not same time, at 1:15. Sorry, for 1:15. Oh, what am I talking about? Yeah, sorry, for 1:15. Yeah, we'll see how we get on there. All right, so have a good one, and I'll update you on the ADR research as I go this week, and we'll see if we can find a little bit of an edge there as well. All right, so have a good one. Anything you need, let me know. I'll be in Telegram or Discord. Other than that, I will see you guys next time.